Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Brad McMillan, Chief Investment Officer with Commonwealth Financial Network. It's great to see you again, Brad. Welcome back to Trade Talks.
Good to see you, Jill. Thanks for having me.
And it could not be better timing because strategists like yourself have been inundated with questions like, is the market crashing? In response, you put out a note reiterating where stock prices come from. So what are the two factors that influence prices the most?
When you look at stock prices, they don't come out of nowhere, Jill. They come from two things. They come from corporate earnings, okay? As long as companies are making money, those earnings are worth something. But then you have to look at how much investors are willing to pay for those earnings. And that's what we mean when we talk about valuations. And PE ratios are probably the most common version of that. The price to earnings, how much people are willing to pay for those earnings. So if we're going to get a crash, it's got to come from one of those two areas. Either earnings have to go down or valuations have to go down.
And would you say this is a normal volatility environment? I mean, we've been seeing 1, 2, 3, 4% increases to the upper downside virtually every day since the year started.
Well, I wouldn't say the volatility is normal. This is a remarkably unsteady market. We're seeing pull downs of a kind that we don't see that often. At the same time, just because we're seeing volatility, that doesn't mean the foundations have been derailed. It just says the market is adjusting much more quickly than it usually does. You know, and why it's adjusting, obviously, we've got a bunch of things going on. We've got Omicron, we've got the Fed, we've got a potential war in the Ukraine. So there's a lot of things the market is reacting to, but that doesn't mean the fundamentals have changed all that much.
Right. So then what would have to happen to get a crash? We know we're in correction territory for a number of the indexes here, but to really get a significant flush out, what would need to happen?
Well, again, there's two things. We look at earnings, and when you look at the basic economy, people are working, people are making money, people are spending money, companies are investing. The economic fundamentals remain solid, so earnings are not going to collapse, at least over the next year or so, it looks like. So we're not going to get a crash from earnings. Well, okay, so it's got to come from valuations. It's got to come from investors saying, okay, we see the companies are going to make this money, but we're just not willing to pay that much. But there you've got to say, well, at what point does it make sense to buy back in? And that typically comes from interest rates. And as long as interest rates are in the range they've been in at over the past 4 or 5 years before the pandemic, then we should see valuations in that same range. And that limits the downside. If that's the case, if we stay at about 16 times forward valuations, which is where we should be based on the time before the pandemic, then we should see the market start to bottom out probably in another 5 to 10%. It limits the downside.
So how should investors be approaching the market with this backdrop, thinking from more of a longer term investor point of view?
Investors should by and large be ignoring it. Your portfolio should reflect that sometimes we're going to get pullbacks like this. Your portfolio, you should buy into the market knowing it's going to go down sharply sometimes, or sometimes like last year, it's going to go up. This is normal volatility, and that's the message. You don't have to do anything at all, and you shouldn't do anything at all. If you're a trader, of course, maybe you want to react to this, but from a long-term perspective, this is noise.
All right, Brad, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.